What's going on, guys? Taking another intraday look at the triple Qs, which is the NASDAQ 100, our mega cap stock. So what we're kind of looking at here, still developing, could be in inverse head and shoulders for a short-term relief bounce. Obviously, we know we're coming off those lows on Thursday of around $284. If we kind of look back to last week, Tuesday and Wednesday's time, kind of put in this little shoulder here. We do have the head here. We've got the neckline up here, as well as this little right shoulder forming here. Big thing that's going to validate this is getting back over 304. Okay, so we need to get over 304. We need to start building over the 200-day moving average, and if we can do that, we can possibly see, a short term, again, because this is a bear market, a short term dead cat bounce with a little bit more relief. So if we want to see if this happens, where potentially could we be looking at as an order of, kind of that next supply zone, right? So if we kind of look here at Friday's highs, we still have those highs at around 303.20. We need to break those highs, and if we do, then we would start testing this top wick from 511, and then the next supply zone is that 305. So if we want to see some sort of continued relief bounce, if you're maybe you bought some stocks or you're holding the trade and maybe you're looking to swing this for a couple of days, here's what you have to play. You've got to use the daily 5-day moving average as your absolute stop. Whoever controls the 5-day moving average is going to normally control the next day's sentiment. Being that we did close over the 5-day moving average on Friday, the bulls do have control of the price action today, which you can kind of see. We had that back test, that early morning pullback. We pulled right back into the 5-day moving average, and now we're kind of putting in this little small hammer candle as we wind today's session down. So as of now, as it stands, with about an hour and 15 minutes left of the market before we close, this is nothing more than an inside bar day. This day could still be rejected tomorrow on any type of gap up, and if we were to lose a 5-day moving average, well, then we're looking to go short. Okay, now if we continue to build on this price action and we can get that close over Friday's high, then we would be looking at that 305.50 area, and anything over 305.50, because again, this is all about taking baby steps. We're not looking back up towards, the 50-day moving average at 334. We're not looking at 364, which is a 200-day moving average. We're looking at one supply zone to the next. The next supply zone that we need to reclaim is $305.50. That's the 10-day moving average. We can talk about what the next measured potential move is after that, as soon as we reclaim that level. But as of now, be careful on the shorts. Not saying that you can't scalp a short on a rejection on, let's say, a 5-minute time frame, 15-minute time frame, but just be careful. Right now, we are forming a little bit of a hammer candle that could push into 305. Now, if you're long, do not get comfortable. It is not time, to fall asleep at the wheel and take your foot off the gas. Right now, you need to be managing your positions accordingly, because this can stop at any particular price and start to retrace back down towards that 5-day moving average. I feel like as long as you're managing your position correctly and you understand the levels of where potentially we could be heading and what level we potentially need to hold in order for this to continue, I think you're going to do okay. Guys, join the Discord. That link is down in the description box below. We are trading 5 days a week. Active, very, very active trading throughout the intraday sessions. Also, make sure to subscribe to the YouTube and give me a thumbs up, and I'll see you guys all in the next one.